1610? Maybe that's cash flow, 1610. All right, gang. How would you start this thing? How would you start it? It wants you to do indirect method cash flow statement. So what's the cash flow statement going to look like? Company name. I heard that. Company. Be sure and put that down. On any financial statement, please put the name of the company. Then you also probably want to say what the financial statement is. What is this one? Cash flow statement or a statement of cash flows. So be sure and do that, of course. I don't think we have to memorize that. Is this for, do they keep these accounts open forever? You know, like on the balance sheet, so you just say a specific date? Or is it for a year ended like the income statement where you start over and count for just the year? Well, here, what do? You start with the beginning balance and work down to the ending balance. We do that in the equity statement too, by the way. So if you start at the beginning and work down to the ending, what is it? It's just for 1 year. So what would we say? For the year ended. Of course, it's common sense, okay? And then the date, and this is 2002. So whatever the date is, and then 2002. Okay? What's that?
It's December 31st.
Oh, it is December 31st? Okay, so put in 12/31, 2002. And of course, you'd write everything out real pretty in color. Okay? Then there are 3 sections, they're upside down. What we do first is we obtain our financing, and then we do our investing. Financing comes from equity holders and long-term debt holders, right, guys? And then we invest in non-current assets, and then we run the company. That's called operations, right? And that's why we have all our current assets and our current liabilities, so we can operate, right? That's how we think about this thing. Okay? You keep it really lets you keep it straight. You don't have to memorize everything. It just works. Okay, so what's the first section? Seeing as they're excuse me, upside down.
Operation.
Operating activities or operations or something. Okay? And then we'll go down about half the page and write investing. So pretend I'm going down the page. You'll just have one column going on down. Okay? It's easier. Okay? Investing, and then 3/4 of the way down the page, financing. So like I said, they're upside down, so you can remember what the order of them. Okay? And just relax on this. You're going to have plenty of time to do this. You're going to have time to think about it because it goes really quick. You know, you look at, okay, that goes there. Okay, that goes there. You know, and they'll just fall out for you. Okay? You won't get flustered. So when you add these 3 sections together, it of course has to be what sings the cash flow statement. Increase or decrease in cash, right? That's it. Okay, did cash go up or down, by the way? Went down. Really, some companies have cash go up, you guys, honest. So maybe I'll give you one where it goes up. Both these problems had down, didn't they? I don't know why. But anyway, so yes, that's what happened to the company. So this would be decrease in cash. It's going to be the total of those 3, right? Because we are going to write down the change in every balance sheet account once and only once, right? And when we add them all up, it's going to, except for cash, when we add them all up, it's going to, of course, be the change in cash, isn't it? Right? Everybody got that solid? By the way, it does pay to repeat this over and over. I know I'm saying exactly what I said before, but it really does. And you repeat it to yourself, too, until, okay, this makes sense, this makes sense. Everything falls in place, right? Okay, decrease in cash is going to be a certain amount. Of course, that's going to be brackets. How much was it?
It was decreased by 7.
7. Okay, and by the way, as soon as I wrote that down, what account should I check off? Cash. Put a check next to cash when you do that. Okay, good. And then you take beginning cash and you add it to the decrease, and of course that will give me ending, I think. World I live in. Okay, so ending cash is going to be the end of it. So let's see, what was ending cash or beginning cash? 11. Okay, so ending must be 4. That's it, huh? Okay, 1, 2, 3, I don't know, 4 or 5 points. Maybe now. Got it? So, nice deal, huh? So anyway, get it set up. Then what do you want to do? Should we do it differently this time?
Sure.
You want to go through the accounts in order? Like we couldn't remember where to put things, so we just went down in alphabet, or rather in top to bottom here? I don't care. Because you know where they go, don't you? What is the basic format of this thing going to be? What's going under operations? First thing's going to be probably what? Definitely what? Net income or net loss. If it's net loss, put brackets around it. If it's net income, don't. Then what's probably going to happen? Almost every company. Well, first, before that, that'll be changes in current assets, probably. And then we'll also have changes in what? Current liabilities. So we'll have those 2. But what would you probably have right after net income if you happen to remember? If you don't remember, you'll remember it later, won't you? What's always there? Depreciation, right? Yeah, depreciation. Probably depreciation right? I'd probably add depreciation. I bet that's going to happen. If you don't remember that, it doesn't matter. Depreciation, amortization. If you don't remember, you'll find out later when you do what? Property, plant, and equipment, right? There'll be accumulated depreciation. You'll pick it up. But that's going to go there. And then what other things might go there? Gains and losses on investing and financing activity, because they're not part of operations on the income statement. And you know what? You can look at this income statement, you can see a gain on sale of investments and losses on equipment. I know there are going to be gains and losses. Wow. I'm going to add back the loss. Any losses, right? These are non-operating losses, right? Operating gains and losses stay in operations. Make sense? You know, revenues less expenses, those types of things. Okay? Yeah. All right, and then I'm going to deduct the gain. And not that they're not gains and losses, what's the deal with them? I don't want them in operations. I want to move them over to financing or investing activity, wherever they belong. Okay? So if you remember that at the time, great, leave room for it. If you don't, who cares? You're going to find it anyway. Okay? So let's go through the order. We did cash, let's do accounts receivable. Where does it go? Change in current asset, right? What's accounts receivable? What kind of account? The current asset, and what happened to it? Which means I did not collect a whole bunch of my sales. 80. So I have less cash than net income implies. Did you guys agree with that? Okay. So increase in accounts receivable. You just pretend you bought it with cash, right? You didn't collect the cash, and the receivables went up. Is that right? And you debit accounts receivable and credit sales, and you never did debit cash and credit accounts receivable, did you? Right? Cash didn't come in on that 80. So that increase in accounts receivable is 80,000 less cash. Got it? Check that one off. How about inventory?
Operating.
It's also operating, right? Current asset. What happened to it? Up or down? Decrease in inventory. So what happened was I have cost of goods sold that used no cash because it used up inventory. If I had replaced the inventory, then it would be exactly the same amount of cash as I have cost of goods sold, right? But I didn't replace it. So you just pretend you sold it for cash, right? Okay? So I have more cash because I didn't replace my inventory. Make sense? So an increase or a decrease in a current asset other than cash means I have more cash. Right? I didn't replace it. Okay? 35,000. Going the other way. Let's put a check mark next to that one. What about prepaid expenses? It increased. It decreased. Increased. I can't get it out. Okay, it increased. What did I buy it with? Cash. Increase in prepaids. 2,000. I bought it with cash. I have less cash. Just like that. Okay? Now you can check off that one. Should we keep going that way? Plant and equipment? Doesn't matter. Want to do plant and equipment? What's plant and equipment going to look like? What will you do in plant and equipment? This one I think I'd analyze. Why? Because several accounts are going to be used. What are they? Plant and equipment and accumulated depreciation. And there'll be depreciation expense too. I don't know if I need a key account for that. There's going to be a debit to it. But we're going to analyze that, aren't we? What are the possible things that can happen to plant and equipment? You can buy it and you can sell it. True? If I buy plant and equipment, what would it be? Debit plant and equipment and credit cash. We pretend everything's for cash. It's not really. It's probably mortgage payable or contracts payable or something, right? But it'd be debit plant and equipment, or just plant, or just equipment, building, just equipment, land, whatever it is. Okay, and it'd be credit cash. So we could say it's going to do that. We could also sell plant and equipment. If we sell plant and equipment, what do? Debit cash because you get cash. Credit what? Plant and equipment because you don't have it anymore. And debit what?
Gain or loss.
Gain or loss. Yeah, that's true, but before that, we need to get rid of the accumulated depreciation on it, don't we? To get our book value, right? And then we'll have either a gain or loss. True, guys? That's right, isn't it? Okay? Yeah, we know this stuff. Okay, and then so that's the other possibility here, right? So that it hits both accumulated depreciation and plant equipment, right? And then there's one other thing that's going to happen to accumulated depreciation. You could increase it, right? What's the entry for that, of course? You credit accumulated depreciation when you debit what? Depreciation expense. You guys all know all of this. Nothing new, huh? This is a great chapter, right? There's nothing new here. Just get organized, right? Just get organized. All right, so what do we know in this case? What do we know about plant and equipment? Okay, he says 420, that's here, right? And then it goes up to 500. What's the minimum amount you must have bought? 80. But you already said that we sold some. How much did we sell? We sold it for 18. Isn't that debit cash? I think so. Right? How much did it cost us? How much? So it comes out of there. So that's 30 coming out, right? Everybody agree with that? That's all we're doing. Okay, and then how much was depreciated on it?
20.
10, right? 18 cost 30, there was depreciation of 10. Okay? Yeah, 10, only 10. So what was my book value? The asset cost 30 and I have the accumulated depreciation of 10. It was 20, wasn't it? And I sold it for 18. What happened to me? You have a loss on sale. Loss of how much? 2, right guys? Okay, so I'd have that 30 come out of here, right, for that entry. And then I'd have the accumulated depreciation 10 come out of here. So I'm really explaining 20 change across the two accounts, aren't I? This journal entry explains 20. Everybody agree? Okay. You know, you look at that, if you took 30 out of plant and equipment, that would have made it 390 and now it's 500. What happened to plant and equipment then? You bought how much? 110, just like that. Okay? So I must have bought 110 and we'll assume all of it was cash for now. In real life, be a little more sophisticated. Okay?
So the book value is just the plant and equipment minus.
You got it.
Okay.
The plant and equipment we sold was 30, right?
Yeah.
Accumulated depreciation on it was 20.
Okay.
Whoops. Was 10. Oh, come on, Keith. Was 10. Whoa. 30. That's 10. Right? So the book value or carrying value is 20. And then my sales price is 18. So I think I have a loss on sale of 2. And that's on the income statement too, isn't it? That 2 loss. Got it? It doesn't have to be on the income statement. We don't have to see it separately in the income statement. We know it's a loss. No, because we can do the journal entry. They don't give it to me, who cares? All right? Just relax and figure it out. Okay, well, you know what? That 110 will take care of that one. So we have this cash going out. We have this cash coming in. I want to pick those up, don't I? Okay, and then what else happens on the depreciation? You know, what'd you start with on the depreciation? What do we end up with? Looks like depreciation expense was at least how much? Went up by 15. It's at least 15. Except you retired 10, so what must it be? 25. And I think they even told you in the problem it's 25, but did they need to? Of course not. Right? We know it's 25. It's got to be 25, doesn't it? Right? So just relax and do it. It is 25, isn't it? Catch me if I screw up. Debit depreciation expense, credit accumulated depreciation, right? Now there's no cash in that, but what's the deal? This depreciation expense is an income, isn't it? And I'm reducing income by that 25, aren't I? And it didn't use any cash. Got it? When do you use cash to buy the equipment? When you bought it, or at least when you pay off the debt, right? Not when you depreciate it. It's a non-cash item, isn't it? So we'd be adding back and subtracting all the non-cash losses and gains, expenses and revenues. So in real life, there might be a number of these. Got it? Deferred revenue items, you have to do those. If they're non-current. Okay? So we got that stuff. Non-current prepaids, we got to do those. Non-current receivables and payables, might have to do. Okay? It gets more complex, but it's still the same idea. Okay, good. Well, let's pick all these up then. We want this one, and this one. Okay, so the first thing, let's do the purchase of equipment, huh? Let's do that one first. So where would you put the purchase of building and equipment, whatever we purchase? Under investing. And we don't want to put down purchase of plant and equipment. We do not want to put down the change in plant and equipment. We want to put down the change in cash. So it's debit plant and equipment for 110 and credit cash for 110. So you put brackets around this one. Everybody got it? That makes sense? Okay. So that took care of that one. So now we've explained this piece here. Then what do we need to do? Let's pick up this 20 over here. How's that going to go? I'm going to pick up the 18 cash I got, but I'm going to add back the 2 loss, aren't I? That's on my income statement. Because my income statement's too low from an operating standpoint. And what's 18 plus 2? Miraculously, it's 20, and we've explained the 20 change. Everybody see it? Get it? Okay, so here we go. All right. So, where would we put this then? How about sale of equipment? Where you want it? Under investing. So we're showing both the increases and the decreases here, aren't I? Right? In cash. I guess that was a decrease and an increase. But anyway, you got the idea? We're going to show both of them in each of these under investing and financing because they're big, they're material. And we just show the changes down here under current assets and current liabilities. Right, guys? Okay? So here we go. Sale was equipment, wasn't it?
Mm-hmm.
Sale of equipment, how much? We got 18. That's more cash, right? But I'm explaining a 20 change, so what do I want to do? Add the loss on sale. And you know what? If you didn't know to write down that loss on sale, would you do it now? Sure you would. Okay? So just relax. Don't say, oh my gosh, I can't remember what I'm doing. Who cares? Put all zeros on those. It's probably ought to be consistent, don't you think? It's a little funny otherwise. Okay? By the way, if you don't want to put the zeros, what you do is go up to the top up here and put this, thousands, and there you go. Or millions or whatever. Got it? You can always do that. Seeing as I'm not doing it, I guess I'll get rid of that. Okay, good. So what else we got? The depreciation, right? So let's add back the depreciation, huh? And we're done. Then we will have taken care of all 3 of these, won't we? Okay? And I can check off those 2 accounts. Okay, so what was the depreciation expense? By the way, do not write down accumulated depreciation. Some people do that. What are you doing, right? It's the expense that's on the income statement that we're adding back, right? Not the balance in accumulated depreciation. So don't do that. Got it? Okay. You either. Okay, anyway, so how much was it? 25. We're good. Okay. All right, I guess long-term investments. Keep going in order. What happened? It went down by 7, is that right? What does it say down below? Sold for 12 and it cost 7 a few years ago. Well, we know what the 7 is, don't we? They credited investments. You can do an investments account if you want, but it went down by 7, right? So how much did they buy if they sold 7 and the account went down by 7? How much did they buy? None. Right? Okay. All right. So investments go down by 7, credit. Debit what? What did they sell them for? 12. What's the 5? And you sold something that cost you 7 for 12? Gain. This is a non-operating gain. Why? Because it's a non-current asset. Got it? What if there was a gain or loss on retiring debt, long-term debt? It's non-operating too. You'd have to adjust for that one too. Wouldn't you? I won't do that to you, but in real life you would. Okay? All right. Gain on sale. Fantastic. We're thrilled. Okay, so 5. So what do you want to put on your cash flow statement? 12, of course, because that's the cash. But what do you want to explain in the account? Only 7. So what do? Subtract the gain. Right? It's not that a gain doesn't generate cash. It's that it belongs in investing, not in operating. Okay? So I'm getting it out of my income. Right? From a cash basis standpoint. So that's all we're doing, gang. Okay? So where do you want to put this one? The non-current asset. You want to put the gain here? Okay. Gain on sale of investment. How much was it? That's his sale, honest. SAE is sale. Okay, anyway, 5,000. Okay. And then what? Where do you want to put the rest? Investing. You bet. This is sale of investments because it's a non-current asset. If I purchase them, I put them there too, but that would be cash going out, right? I show both. Okay, so what do we got? How much was it? That doesn't work. 12 plus 5 is 17. What did I do wrong? I am deducting the gain. Seems backwards, doesn't it? I'm deducting the gain because I don't want it in operating income, right? That's all. I don't want it in the operations section. I'm putting the gain over here where it belongs, okay? 7 changing the account plus the 5, right? That's cash account. Everybody good? So the difference between the 12 and the 5 is the 7 I explained in the account, okay? Check off investments. Huh. Well, I guess we're down to liabilities. Accounts payable, what kind of account is that? Current liability. If I have more of a current liability, what happened? I didn't pay my bills, I have more cash. I had borrowed money. What if I have less? I paid it with cash. This one's easy, isn't it? Okay? So what happened to accounts payable, up or down? Increase in, and did you notice these are exactly the opposite of current assets? A current asset, if it went up, I bought it with cash. If it goes down, I sold it for cash. The way you can think about it, okay? You can think about it, but it's not really what happened. Okay, increase in accounts payable is more cash by how much? 75,000, is it? Check off that one. Okay. Oh, by the way, we checked off plant and equipment, accumulated depreciation, long-term investments. Check off accounts payable. Accrued liabilities, what happened? It went down, didn't it? How much is it? It went down. 10? What do we pay it with? Cash, way less cash. Everybody agree? Could there be other current liabilities? Of course, right? Short-term notes payable stuff. All right. So what's next? Bonds payable. Bonds payable is a what? Non-current liability that went up. What would you say about that? If it goes up by 25, I must have done what? Borrowed money, right? So what would it be? Let's say I had bonds payable. All I know about bonds payable, because it doesn't say anything down below, is it started at 170, liability, right? Goes up to 195. So how much additional did I borrow? 25. And what I do is debit cash, right? That's what they would have done. That's how it got in there. And credit what? Bonds payable. So if this is all that happens, what would I do? Pick up that 25 and put it where? This is a source of financing. So it's non-current, right? Non-current debt. Financing activity. So here we go. Under financing, what would I call it? Issued bonds payable. Okay. Everybody got it? I'd have more cash, wouldn't I? It's a debit cash. Okay, now, what's the deal with this? What if I paid off the entire 170,000 and then issued 195 more? What would I have done? Well, it would have been credit, cash, and debit bonds payable for 170, right? And then it would have been debit cash for 195 and credit bonds payable for 195. And what would I do over here on my statement? I'd show the 170 going out and the 195 coming in on 2 separate lines, right? Just like I did here. Purchased equipment, sold equipment, right guys? If I, in here where I have a sale and investment, if I also purchase some, I show both, right? Why? Because in investing activities and financing activities, they're very material transactions. They're big. We want people to know about them. Got it? Why do I net them here in the current assets and current liabilities? Why do I just show the change? It's a whole bunch of real small transactions, right? How many times do you debit accounts receivable during the year? Oh man, every time you sell on credit. How many times do you credit accounts receivable during the year? Every time a customer pays me. I don't show them all, right? They're real small. I just show the change. Got it? That's the indirect method. Okay, good. So now I guess we have bonds payable, deferred income taxes, and that one you probably didn't follow when I did it last time. I'm not sure I did. That's fine. Okay, anyway. How does deferred income taxes work? What's the deal with deferred income taxes? What's going to happen is I'm going to calculate my income. Take a look at our income statement. I calculate my income. It's 80 before tax, right? And then apparently, what tax bracket are they in? What percent tax do these guys have to pay? Apparently. At least this particular year. You know, 24 divided by 80, what is it? It's 30%. That's real low. Okay. Some companies that have a lot of international operations, like Young Brands, pay a tax rate like that. But it's because they don't pay taxes in foreign countries. Okay? So, and also they're a little too aggressive, the IRS here thinks. So they're coming after them for those taxes. So a whole bunch of companies, U.S. companies that were very aggressive in how they interpreted tax law are now being pressured to pay more tax, and they're starting to show more tax expense on their income statements. It's kind of interesting to analyze these companies. So, you know, yeah, maybe they owe some tax and maybe interest, maybe even penalties. I don't know. It's possible. We'll see. By the way, we have a number of students who are working over at Yum Brands in their tax department. It's a really good career. You know what their job is? Keep Yum from paying taxes. It's okay, as long as you follow the law, right? And they didn't intentionally violate anything, right? They're just being aggressive about how they do it. So there are ethical issues, you worry about these sorts of situations. But they pay real well, and they're real bright people, and they're trying to, if Congress passes a law that says he has to pay tax but you don't, that's the way it is, right? So what if you lobby to get that law passed? Oh well, right? You win, he loses. Sorry. I'm not kidding, that's kind of how it works, guys, right? So everybody lobbies Congress, right? Take care of my industry too, not just their industry type thing, right? So anyway, so all these offshore things that you hear about, that you read about, companies are moving their operations to another country for tax reasons, the IRS is going after that stuff. You really operate in the U.S., but you want to pretend you don't, even though you sell a whole bunch of stuff here, maybe produce stuff here. So you can avoid paying taxes here. Well, they're seeing through that stuff. But it takes a long time, a lot of work. Okay, anyway, how's this tax going to work? What do you think their tax expense is for this company for this year? It's 24, right? 24,000 or whatever that is, or a million, right? So tax expense is 24. But think about this. They have depreciation here in this problem. How much was the depreciation that we ended up with? We had to calculate it, didn't we?
Depreciation expense?
Yeah, what kind of depreciation expense did we come up with? 25, yeah, it's 25. So what if for tax purposes our depreciation was a lot more? Could it be? Sure, I'm buying new assets all the time and I'm depreciating them a lot in the early years. I'm using modified accelerated cost recovery systems. So could I have a lot more depreciation expense on my tax return than I do on my income statement? Absolutely. Included in this income statement is that 25 depreciation expense. It's buried in cost of goods sold and operating expenses, right? It's in there. Okay, it's got to be in there. We know they had 25,000 in depreciation expense, don't we? Okay, so what if they have a lot more depreciation expense on their tax return? What will happen to their taxable income? It'll go down, and they'll actually pay less. So the credit to cash or first taxes payable and in cash, right? Taxes currently payable will be smaller than the 24. And that's true here. It happened. It's not necessarily for depreciation. There's other timing differences too, right? It could be any revenue that is on the financial statements that's not on your tax return. You get to recognize the revenue later. Or it could be any expense that is on the tax return that's not on your income statement, like the depreciation example, right? It could be all kinds of other ones, okay? Royalties, that kind of thing. A lot of times royalty income doesn't get recognized until later. It's deferred income on your financial statements, but it's taxed now on your tax return. So it could go the other way too, okay? It'd be called a deferred tax asset instead of a deferred tax liability. This gets kind of complicated later, okay? So take a look at that deferred income tax account. What happened to it? It went up by 8, didn't it? That's whoops. Deferred income tax went up by 8. So what I've got is an 8 credit to deferred income tax payable. Oh. So how much cash should I pay? If I put off and I'm going to pay till later, what was the tax on my tax return, which is the tax I'm going to pay? How much was it? 16. You guys stay with me pretty good? Right? Stay with me pretty good? That's what's going on. If deferred income tax goes up, payable goes up, it means I paid less than my tax expense. Could it go down? Of course it could go down. What if I don't replace all that equipment and now it gets older? My depreciation on my tax return is really low. So my taxable income's higher, right, than on my income statement. So what would happen is my cash would be, let's say my tax expense is still 24, this might be 30. And I'd have what? A debit to deferred income tax payable of 6. It reverses itself in later years. That's what happens if your company gets in trouble and they can't keep replacing assets, right? And we already talked about the deal with LIFO and FIFO, huh? Right? The LIFO can cause tax issues too for you, right? Okay, because you put off paying the tax till later. Well, later might get here, right? When later gets here, you have to have the money to pay the tax. Okay, anyway, so how much cash went out is the main point. 16. What does it show on the income statement as an expense? 24. Oh, how far off is my net income from a cash perspective? 8. So what do I want to do? Add back the 8. Cash going out was only 16, not 24. I took 24 out of net income. It's just like the depreciation I added back, right? So I'm going to add back, should have been up in here somewhere, add the increase in deferred income tax payable. How much was it? 8,000. All right, so now you can check off that account. What's left? Common stock. Now this time, common stock went down. What must have happened? If it went up, that would be debit, cash, credit, common stock. And additional paid cap would go up too, right? Okay. What if it goes down? What does that mean? They bought back their stock and retired it. They bought back treasury stock and retired it is what had to have happened. Okay? So we've got what? Debit, common stock, and credit, cash. I have less cash. Where does it go? Equity is part of financing. It's where money comes from to run your business. So what's this going to be? Repurchase common stock. It was 40,000, was it? Debit, common stock, credit, cash. And now you can check off that one too. All we have left is retained earnings, which ordinarily you'd probably start with that one, but it's okay to do it this way. The reason I like to do this is it makes the point it doesn't matter what you remember and what you don't remember. You'll find it, right? Just relax and keep going. Okay, so what are we going to do with retained earnings? It's the last account we have that we haven't checked off. What's beginning? What's ending? It went up by 40. I want to explain the 40 change. What's that going to be composed of? Probably net income. What's the minimum net income was? 40, right? It's got to be. It went up by 40, right? How much is net income on the income statement? Well, wait a minute. That would have made it 148, and it's only 132. What happened?
Dividend.
There's a dividend. How much was it? Did they have to tell you it was 16 like they did in the problem? Of course not. They could have given you either the dividend or the net income. They don't have to give you both. Let me ask you this. Way back early in the first 4 chapters, if I gave you any 3 of those 4 numbers, could you calculate the other one? You know, take away that one. Could you figure out what it is? Of course, you just back into it. So any of them you could calculate with the others, couldn't you guys? Always remember that and always use it. When you get into some situation where, oh man, I can't figure out what's going on, write down what you know and solve for what you don't know. I mean, that's true in personnel problems. I'm trying to decide who I want to hire. Write down the advantages and disadvantages. You know what'll be funny? If you, and you were all in the same group and you're trying to decide who to hire, you'd have different concepts of what the attitude, what the advantages and disadvantages are. Write them down, and you'll convince other people. Right? Oh, I hadn't thought about that one. Oh, I better look at that. I'm kind of doing it right now. I'm trying to convince my colleagues who to hire for chair. And they're totally different. Let's do it when we really like. Totally different. Trying to also convince myself what we should do. I'm not making a decision. The president will make the decision, just to make a recommendation. But you know, one has a lot of really great strengths and then horrible weaknesses. The other one has really great strengths and then horrible weaknesses. Right? We don't have enough money to hire the ideal candidate if they exist at all. Right? Even if they did, we're not going to pay that kind of money. Right? And if we did, that'd be a problem, right? We'd have to raise your tuition a lot, right? So you'd have to pay for all of it. They don't want to pay for any of it. True? Yeah, it's kind of weird. Okay, anyway. So what do we want to do with these? Where do you want to put the net income? Where do you want to put the dividend? These are transactions with owners, right? retained earnings. But the net income came from what? Running the company, revenues less expenses is the net income. It is from what, everybody? Operations. So net income is how much? 56. Ta-da. And you could have written that down right away. But if you do write it down right away, what should you do? Discipline yourself to do this. I really recommend it. If you put that one down, for crying out loud, put that one down too. Otherwise, you will come back later and you'll put that 40 down there and you'll have 56 and 40 both down. Okay? Don't do that. And everything will go crazy on you. You want to explain the change in the account once and only once. So if I put 56 in there, what do I need? Need the other 16, don't I? Where does it go? Transaction with owners, where does it go, everybody? Finance. It's repaying part of their investment to them is the way you can think about it. Okay, so what's this going to be? Dividends declared. It might be declared and paid. In this case, they are paid. How do I know that? Because there's no dividends payable. There'd be a dividends payable if they weren't paid. True. Okay. So how much were they? 16,000? Now what do? They're paid, right? So credit tax. Declared and paid. So what do you want to do with that? Add them up, right? What do you call this one?
Cash flows.
Cash flows from
Operating activities.
operating activities. No kidding. What's this one going to be? Total cash flows from investing activities. What's this one going to be? Cash flows from, total cash flows. From what? Financing activities. Counting, that's activities, A, C, D. All right? So add those up. Remember, on a quiz, I'm not going to give you the answers. What'd you get? I could probably actually pull these off. 60 less 25, what's that, 30, 35? 31. 56 less 25. 31 negative, is that what that one is? Something like that. This one's 110 less 30. So this, if we did it right, so this is 80 negative, is that right? That one must be a real big positive. Because that's 111 and that's 7, so this has to be 104, is that what it is? Positive, I think. Add those up, is it 104? You may do it. So then 104 less 1, less 80, less 31 is negative 7. So, easy?
So back to the tax thing. So you did not do anything with the tax expense?
No, the tax expense is already out of the net income. So this 56, if you look at the problem, has the tax expense out. Yeah. All I'm saying is that tax expense is 8 more than was actually paid. So it's just like adding back the depreciation because it's a non-cash item. Only in this case, the cash portion, the cash was 16 instead of the 24 that was deducted. So I'm only adding back the 8. Did that do it? Yeah. Could go the other way too, right? What if deferred income tax goes down? Sales goes down. You pay more than the tax expense, right? Instead of adding it back, you just subtract it. I won't do that to you guys, but that could happen. Easy? I'm tired of you guys, of this semester. Isn't it funny? College is a great thing though, because I like it from a professional standpoint, going to being a professor. But the thing about public accounting was it never stopped. It never stopped. You could work 24 hours a day, 7 days a week year round, and there was always more to do. So you had to learn to say no, nicely, but you know, I really am going to take a vacation. Oh yeah, you're not really going to take a vacation. You got to schedule. No, I'm really going to. Honest, I'm going to. Somebody else has to do this. And then the partners would say, that means I have to do it. And I'd say, yes, it probably does. Fire me. You know, and then they'd laugh and say, I'll go on vacation. Right? You don't get very many of them that way, right? But then the bonus checks are really nice at the end of the year, too. I'm happy with that. Because you get paid for the time you put in. You get paid well. So, yeah, it's nice. But anyway, I mean, you're young, which is nice. But what's nice about this is the world stops, you get off. All you guys are going to go away whether you know anything or not. I guess I did what I did when it's over, right? Can't fix it now. Well, unless you come back and do the class again. None of you guys are doing that, of course. I get these things on students that are at risk from the Academic Resource Center. I get an email today that there are 2 students that I thought had dropped this class a long time ago that are still in it. And they wanted to know what their grade is. They haven't taken a quiz since about the 3rd one. What do you think their grade is? Oh, that's right, I'm adding all those points to the final. They may have, what, a 500-point final? Or more? Okay with me. Be all right. Maybe it's only 450. I don't know. It's possible, isn't it, you guys? You could learn all this stuff in a couple of weeks, couldn't you? Crank it out. If you ever get in trouble in a class, what should you do? That's the first thing. And then if you can't recover, if you're taking too many credits or you just screwed around too long and you got too far back, you know what I mean, right? None of us have ever done that, have we? Screwed up so much that you get way behind and you can't catch up. Ever had that happen in your life? I've done it with mowing the lawn with my dad. I almost got killed. You know, and stuff like that. Yeah, so yeah, absolutely. It's too late now, yeah. Okay, anyway, so now he's mad. Anyway, and I'm laying on the couch. Yeah, so, so anyway, you've experienced this stuff. What do you do if you're in really serious trouble? Get out. And then what? Bail. Bail! Right? And do it again. How many of you have never dropped a class in this group? Well, you've never. Oh, that's why you're sitting here, because you don't want to. But if it happens to you at some point, don't worry. If it's your last semester and you're a senior and you flake out, like my son was taking a freshman level math class his senior year. And it's one of these dreams you have, you know, where you have a class but you never went. You ever had that dream? A lot of students do, you know, the stress of it, you know. Oh my God, I didn't get my book and I didn't read anything, I didn't do any of the assignments, I didn't turn in the paper, and I didn't do the test, and now the final's coming and I'm dead beat, you know. So that's a common dream. I used to have that dream. Anyway, he didn't dream it, he did it. Anyway, so this friend of mine, he's on the faculty here, of course he's my friend, calls me up and he says, your son is flunking my class. I just thought you got now to have a heads up. It was hilarious. It's really funny. And he's laughing while he said it. I said, what did he do? And he says, I don't know what he did. But he just took the final, like it made a difference, you know. And so then my son was telling my wife about this, because my kids always tell her kids are afraid of me. Why would you be afraid of me? I don't do anything. Anyway, so she made him tell me. So I got told twice. This is really 3 times. It was really hilarious. So and then we laughed about it. And after he graduated, he got his political science degree, but not his economics degree because of the math class. So then he came back for the summer, and they gave him the class for free because professors' kids get the classes for free. It's our major venue we have. It's a real life benefit. Anyway, so he takes the class, and he's an A in it, of course, and because now he's embarrassed. And he's, you know, it's funny though, they still let him in the law school. And he's an attorney now. So, you know, even if you screw up that much, right? It's all recoverable. Plus, gave his dad a really big laugh. That was good. And screwed up this summer, right? For, I don't know, 5 weeks or something. So anyway, message is, if you get in trouble in a class, what do? Talk to somebody. Never go into avoidance behavior. Don't do that on your, and we all do. But have you done this one, where you just pretend the problem's not there? It'll go away, right? You just pretend it's not there. And of course, it just explodes on you. You pretend it's not there, and then you're done. And so don't let a semester get away from you. Don't let a class get away from you. And that doesn't mean don't get yourself any slack either. You guys are all here. You're all serious. You're working your asses off. When you screw something up, oh, so what? When a grade doesn't turn out the way you wanted it to, so what? Right? It's a whole life's work. It's not each individual thing. And you just keep moving on. Because you guys are going to go into high-stress careers. I don't care where you're going, because you guys are performers, right? You're going to go into high-stress careers. You're going to be the boss, and you're going to screw up royally. Right? It's just real. And so just relax and sort of roll with it. Don't screw up next time, huh? Right? That's how you do it. So anyway, I'm tired of lecturing you guys. Not lecturing, no. Tired of bullshitting with you. Easy. Let's take a couple-minute break, and then anybody wants to stick around, I'll make up some stuff. Okay? We'll do some of those investments.
Yeah, I'm just gonna.
You guys are too good.
Okay.